Hello folks, let's talk about how to draw Fibonacci. First of all, in order to draw Fibonacci, the basic market structure which I taught you will be using it at every single place. If you are not revised that, please go and clear it. You should be very much clear. If you have any doubts, don't hesitate to reach out to me, please. Okay, because it's you, right, who is going to stop you. It's about your wealth. We're not talking about video games. We are talking about a game which can destroy you, right? Your wealth. So be serious, please. So how to draw Fibonacci? When we draw Fibonacci only when it breaks the market structure. Okay, so how to draw it, let me show you. For example, a market is going up like this, like this, like this. Okay, making higher highs. So this is a leg, right? Like this is a leg, this is a leg. So from, if it is going up, select the Fibonacci tool. It's going up, then put it the origin, means is the higher low, and then go to the swing high and just drop it. This is called Fibonacci. Now go to settings, double click on it. This is the setting which I'm gonna use. Okay, now let me modify the settings for you. So in the settings, you would be having something like background. Remove the background. Then 0 and remove all these numbers which are greater than 1. It could be check 2.6, 4, like remove everything first. It should be from 0 to 1. This is the first thing you have to be. Then 23% will be green color. Every color has a meaning for me. 23% have a green color. I hope you are doing. 38% you can put any color, like I can, anything. It's not important for me. 50% you have to put this color, like orange one. Okay. 61%, right, you have to put this orange one, same color both. 70% you have to change. It should be 70. It should be 70. It's not 70%, 78.6. It should be 70 for us. Make sure. Okay. Okay, done. Make this color like this, and these are deeper black. One as a deeper black. Now some more ratios we need to add. Check this box and remove this number. Put 95 here and make it red color. This will be our stop loss. Okay, 0.95, sorry, 0.95. This will be our stop loss, and that's it. Then one more ratio we need to add. Check it here and click minus 0.5, this one, and this should be green color because this would be one target for us. Click on OK and check my settings. It should be percent, it should be center and top. Click on OK. This is what my setting. Okay, I hope we are clear here so far. Now let me remove. Let's go. So as I told, when the market is going up, how it goes up? It break the structure to the upside, right? Here you see it's broken the structure to the upside. And in the market structure already spoken. Not gonna speak here again. Will create confusion for those who not learned there properly and jumping in directly. That's why I told don't skip it. So as it broken the structure to the upside, what I will be doing, this is the complete leg. So on the complete leg we draw like this. From it, since it's going up, so what you will be doing, you are drawing from bottom to top like this, like this, like this. In this way you would be drawing from bottom to top. Okay, you would be drawing from bottom to top like this. Like from here you will put and you will drag it again. Let me draw it. Here you will put and here you will draw it. Now let's talk about this. Now this is the point 50 to 60. is a golden zone. We'll mark it like this. Okay, this is golden zone because this is 50%, right? Means it's a half of this length, right? A good, pullback, always pull back up to 50%, 50, 60, and this is 70%. What is the use of this? Will explain. So these are the ratios are clear. Now how I will plan my entry? Okay, not let's not go to entry. First, let's understand how to draw it. So this is an uptrend how I drawn, right? Let me show you the same again in this web. So again, this is a web, and it's coming down like this, coming down like this. So again, it started taking pullback. So what I do, this is a whole leg which broken this structure, this swing to the up. I will take from the bottom and pull it the zero, right? 0% till this point. Okay, as you see, and we'll mark this golden zone here like this. I hope this zone is clear. So I hope you are able to draw this. Like I'm teaching you guys, but like one thing is that like many trainer also watch my courses here, like videos, training programs, right? And will steal it, right? I was first thinking, should I explain this to this platform, right? Because the people take it and sell it again for lakhs of rupees, the same concept, right? Small trainers. So please be aware of this. Don't pay anybody, because this is the original concept. These ratios are invented by me only. Okay, you will never find any videos before you are watching now, and nobody talked about these ratios like 95, 70, okay, 50, 61 is common, but these ratios are totally invented by me. Okay, maybe they are smart enough, they can change this some here and there, but this is the original concept invented by me, and it's very very highly charged concepts which I teach in the live webinar. It's one of the highly charged concepts. Okay, so please pay attention. It's really working. It's the only thing you are missing earlier, so please keep attention. So what I expect is market come to this area, and here somewhere I plan my trade like this. Okay, now let me draw for a downtrend. Let's talk about a downtrend. Market is going down, taking a pullback, breaking the structure to the downside, taking pullback, breaking the structure to the downside. Now here, so here you see market has broken this structure right here, this swing to the downside. So as soon as the structure is broken, Fibonacci, then only we draw Fibonacci where some structures are broken, where you can see some leg. So here you see I'm drawing this leg from here to here. So since how we are going in this downtrend, we are going down. So Fibonacci will be we will be drawing from top, and just put this 0% here at this bottom. This is what our Fibonacci is. This is the zone we would be having. That's it. Let me draw one more for you. The market again broken the structure to the downside. Then we will able to draw the Fibonacci. This is a complete leg. I'm drawing it like this. Let's say I do not know how long it will go, right? Because sometimes it can go up to this, like we don't know. You will only know when it started going up like this. Then only you will realize, okay, this is now it made a swing on the real market. Okay. This is a zone, and that's it. I hope you are clear with this. So this is how we draw the Fibonacci. Let's jump in back here. We'll try to draw it here. So here you see the market, right? You see this is the we'll talk about. Okay, you see this is the area, right? This is a turncoat area where the market has broken, right? So how to draw Fibonacci? How we draw Fibonacci? We draw Fibonacci in 1 minute. Okay, like this. We'll go here in 1 minute. Like this, yeah. We draw it in 1 minute. So in 1 minute you see, and when you draw in 1 minute, you can also compare the same in 15 minutes, whether you are drawing it properly or not. So you see, this is a leg. You can see this. This is a complete leg which is going up. Okay. If I draw from here, this is the complete leg. Okay. Now you might ask me a question, sir. Can I draw a leg from here? It's too big. It's too big. Before this, you see, we were making a downtrend, right? See, this is the one which broken the structure to the downside. You see, this was structure was broken to the downside. So we broken the structure to the upside. Okay. And which leg had broken the structure to the upside here? This one. This complete momentum, non-stop momentum. Okay. Had broken the structure to the upside from this swing to this swing. This is the highest point. So where is our Fibonacci zone? Since we are going up, so I drawn from here to here. This is my zone. Now, golden zone. So this is the place where I would plan my trade. These are the place where my stop loss and target is. So where is the stop loss? Where is the target? Now let's talk about. But in real time chart, it look like something like this. Okay. It takes some time. I will show some more example. It will take some time. Okay. Due to the length of the course, I cannot, keep explaining for 10 hours. I can explain in the live webinars for more than 10 days even until you not reach. But here we have a limitations. There are different kinds of candidate. Some people might not like it. If I explain, they complain. Okay, this person is explaining too much. Explaining too much is also a complaint for few people. I cannot, what to say, guys. Right, that's why I'm telling those who really like my courses, please do rate good, right? Because such people also we met here every single day, right? Which I cannot. I really literally laugh when I read their comments. Like such people do also exist, and some nice people. Majority is nice, believe me. I meet majority of nice. Some here and there we meet, and mostly they are either trainers and mostly they are competitors. Okay, which do it, knowingly. Anyway. So this is what we draw. Now again come back. I will keep going here as much as I can in the beginning, so will help you out. Let me draw the Fibonacci once again. Okay, in 1 minute chart. Let's say this is a Fibonacci. I'm drawing this. This one. This one is a Fibonacci I'm drawing. Don't worry about from how I'm drawing. Just right now focus. When you able to draw it, what next? Okay, you will able to draw it. How I enter these areas. If I'm in buy trade, keep in mind, if I'm in buy trade, okay, I always enter in pair of two. I always use a concept called pair of two, even pair. Okay, let's talk about the lowest even pair, which is two quantity. Okay, means two lots, right, which have 25 at this point. Maybe in upcoming days, SEBI is telling, it's going to reduce some quantity. We'll see when it happens. I hope also you had gone through my candlestick courses, because candlesticks I'm also going to use. So what I see now, let me talk about the concept, golden zone concept. So this is my golden zone. This is 50%. This is 50%. I hope right now numbers you must be able to recognize. This is 50%. This is 61%. I'm breaking it down for you guys, really trying my best to teach you. And there is one more line in the bottom which is like this color only, and that is 70%. It took a lot of time, a lot of money losses to reach to these ratios. If somebody had told me, even by taking 10 lakhs, believe me, I would going to give something which really works. but nobody had told me even after taking money. But now I'm revealing it because almost right, my trading career 50% is over. I made a good wealth. So now it's time to help some people right here, you know, and expect some positive responses also, in this help, some good reviews and, like and all. Okay. Again, there will be some people here might be, telling, hey, he's asking continuously reviews, they also complain here. I'm not asking continuously. I'm just telling because I'm really working hard here, for you guys, and revealing it and making it simple and the self-paced where the people just come and explain, and they go, right? So anyway, let's not talk about those 2% who are unhappy. I know my 98% traders are happy with me, so that's are my motivation to do here. That's the only motivation. And if I will see good response, might be in future I'm planning one more great, next level setups in upcoming, maybe in couple of months and year. I'm planning. So these are the ratios. In 50%, I only enter when there is only one candlestick I see, and that candlestick is hammer. Uh, yeah. If a hammer forms touching the 50%, this is the only candlestick I buy at 50% exactly. If hammer forms by touching 50%, first of all, I never buy at 50%. Keep this rule in mind. Think like this. I never buy at 50%. I only buy if there is a hammer touching the 50%. Okay, in case of buy, I'm talking about bullish market. I only buy when the hammer touches 50%. Condition number one. Okay. Take a note. I'm not going to give you a note every single time. I request you to take a note. It's your responsibility. Okay. Take a note. Okay. So hammer on when hammer touches 50%, enter. Then enter one lot. If I talk about two lots, if it's a 50 lot trade you are doing, then 25 lots will be entered with a hammer. Okay. If there is any other candlestick at 51%, I never ever going to enter. Okay. I never ever going to enter. Okay. So if it's not hammer, if it's not hammer at 50%, then enter one lot. I'm talking about two lots. Similarly, 40 lots, then it will be 20 lots. Means 50% of your size, right? I'm talking about here two lots. So if it's not hammer at 50%, then enter one lot. Okay. When there is a bullish candle in the zone. If in the zone I see there is one bullish candle formed, let's say it's not hammer. Second scenario, hammer didn't form. If this kind of candle also forms, I don't care. It's touching. But when it's, so it's not considerable, right? So I will not enter my trade here. But let's say a second, scenario is like this. A bullish candle form inside the zone. Let's say this is one bearish candle before this. Some bearish candles are there before this, like this is entering in the zone. So the first bullish candle which is formed inside the zone, I enter my one lot here. Okay. If I only enter my one lot at 50%, if this is a hammer candle, because in case of hammer, it not even go inside the zone most of the time. What it does, it simply, jump back, bounce back from it, not go inside. You will not get a chance. So if it's a hammer, I enter my one lot at this place. One lot at this place. So this is either or. So one lot here, or if when market is coming near the zone, so the first candle or maybe whatever candle before, see, before coming to this, if you are getting, immediately reaction and making a hammer, enter the lot. If no hammer and still going inside, then wait for some bullish candle, because sometime it happens you will not get any bullish candle. It will, keep going down and break the zone. Then I will not enter inside the zone. I will only enter when there is a bullish candle. Market is, taking a, maybe this candle can go like this, I'm expecting. So when there is a first bullish candle, I will enter one more lot here. Either at this condition I will buy one lot, and at this condition means one lot means here trading in two lots. I'm trading in two lots. Mm. So you can understand one lot is my 50%. If you trade in 100 lots, if you trade in 50 lots, if you trade in 10 lots, you will put your 50% quantity here. So one lot is equal to 50% quantity here, or 50% quantity here. So making it simple, don't want to make more people, confuse. I'm putting here one lot. So one lot here in this scenarios, or one lot here in this scenario. Second scenario, my other lot will enter immediately. I don't care it's a bullish candle or bearish candle, as soon as the candle touches it. It could be a bullish candle, it could be a bearish candle. One second. One second. Let me take it like this. Okay. I don't care. As soon as market touches 70%. Market touches 70%, as soon as, with a bearish candle, with bullish candle, as soon as market hit this level, I don't care about the candle here, I enter one lot, means my remaining 50% here. This is about my entry. So if this is hammer, now third point is, as soon as market hits 70%, enter one lot. Enter remaining is the right word, means remaining 50%. Enter remaining one lot. This is how my entry happens. We are talking about entry. We are talking about entry and trading in two lots. Okay. You can take a snapshot of this. Some people might take, sir, why not you prepared this thing in a PPT and explain it to us. PPT means, first of all, you guys are, those people are actually trying to tell me how to teach. I already taught many people in past, and when I show in PPT, okay, they sleeps. They means in my candlestick, everything is in PPT. I know in that course many people had slept. They, I can see who is watching what. I can see many people watch some person, they never come back. Even in some people never come back, because PPTs are boring. Here I'm trying to explain it. Even I should not supposed to write it. You should write it in your own notebook. I might be strict, guys, but I'm strict for you. I really want to make you trader. Okay, I teach like this. Okay, so let me be natural. Let me be the way I am. Then only I will able to deliver my best. You know, my goal is, your goal is not PPT here. Your goal is to learn what I'm teaching at somehow, because you will not going to remember those PPT. You are going to remember handwritten notes all the time. So it's a hammer. Even I don't need notes. I always have in my mind, as soon as the market come to the zone, hammer forms. Because in after hammer forms, I had seen market never goes back like this. It immediately jump. like this, if it is coming, okay, whenever hammer forms, it immediately, jump back. That's the reason on hammer, don't wait for this, because it will not happen most of the time. So if hammer enter the lot as soon as it make hammer, if it not make hammer while coming to this zone, then wait for the first bullish candle for one lot. Some scenario it will be like this, it comes like this, make a first bullish candle, you entered here, came here but didn't touch the 70% and go and hit the target. In that case, you will be in the trade with one lot only, means 50% only. You will never enter this, because sometime it happens, it goes like this before hitting the target and again comes back, take your lot and again hit the target. So that's why we will not change our rule, one lot at this area and another lot at this area. If it not comes to this area, we will only trade with half quantity in that scenario, because if it's so volatile, it will go like this. But if it's really had planned to go extremely up, it will come to 70% also, because at 70% it will hit all the stop losses, then it will go. That's the reason 70% is so important. Okay, so this is about entry. Where is my stop loss? My stop loss is, I hope entry is clear. Stop loss. So this is a Fibonacci. I hope at this point you are clear. Okay, this is my golden zone. So on the golden zone, as you know, I cannot see that tool here. Yeah, this is, as soon as it makes hammer at this point, enter, or the first bullish candle inside the zone, enter, or 70% then remaining quantity. Okay, then when you take an entry, so your average will be your 60% some quantity, 70% some quantity. Your average will be always below 61%. That is a great thing, you are buying at the cheapest. That's the logic of all the things, everything has a logic. Okay, and your stop loss will be this 95%. Your stop loss will be 95% in this setup. Okay, so stop loss will be 95%, this one. Okay, so your stop loss will be 95%. This is the number you have to put your stop loss. As soon as the market comes here, even you are option buyer, you have to take your option out at this place. Okay, in the worst case scenarios, market will come to this area, take your order, and will come here sometime. And those people who put stop losses 78%, who are like trading 78% ratio. Some people trade harmonics. Earlier I was trading harmonic, but like I do not trade now. So 78% ratios traders stop losses market hunt, and then it goes like this. So that's the reason, right? We are putting the stop loss in this setup as 95%. Our average is somewhere here in the middle, and this will be our stop loss. And where will be our target? Stop loss and target, where will be our target? So your 0% always be your target one, and your 50%, this minus 50% will be your target two, always. Let's say a scenario, you bought two lots. Let me see if I can write it in some pictorial form. uh, let's see, like this. One lot you bought here in the zone, and let's say another lot you bought here. So what you would be doing when the market is going up, like this, When the market, came here, taken pullback, came up to here even. So when the market is going up to 0%, you would be eliminating your one lot. Your one lot will be eliminated here. Okay. And then you will be, going to remove your another lot, which is at 50%. Okay. Minus 50%. So one lot will be eliminated at this, another lot will be eliminated at this. Now, as soon as target 1 is done, we will always look for target 2, but we will not blindly look, we will keep trailing like this. Sometime it will hit and sometime it will come like this. So your T2 will be booked here on the trailing stop loss. But after, when the market hits zeros, we will keep trailing. Okay, we will be proactive at that time and we will try to book it. Okay, if it is a extreme momentum, it will go and hit T2. Otherwise, we will always going to book here. Okay, so as soon as T1 is crossed, you should be proactive. You should be very much proactive. Okay, so I hope you are clear with this. Okay, and in some scenarios you can also do, as soon as T1 hit, you can trail your SL to cost, and then keep trailing here also. Like you are seeing, the market is started making lower low below the target. When it started to going, book at the market, or you can trail anyway, because after hitting T1, there is 40% probability it will hit T2 direct. Otherwise, what it does, mostly after hitting T1, if especially for the buyers, buy side means bullish side, it comes back. It comes back up to again this 38%. Right? I'm not making the things complex by explaining more ratios to you. So just keep in mind. So the better solution will be, as soon as T1 hits, keep trailing. How to know? I will tell you one hint. I am going to tell you a symbol. By that you will know when your SL is going to hit. Let's say you entered here, some quantity here, some quantity here. So your average is somewhere here. When it start getting rejected at 23%, that's why I made this green color. It start, getting multiple rejections at 23%. Then you should understand it's going for SL. If it start getting multiple rejection, like 1 2 3 times, like that, more than one, like 2 times, like 2 or 3 times it's rejecting from 23%, then be prepared for SL, because in those scenarios I had noticed, this is again on my experience, I'm telling, market will go and hit your stop loss in those scenarios. Okay, so in those scenarios you have to see your SL will go, before that it will give you a warning. Okay, and that warning will be, it will start rejecting at 23 and it will be a sign it's going for the stop loss. So now it's your decision, because from here it's your average is there, you already get very good risk reward. If your average is here, stop loss is here, so up to 23%, you see, you already had more than 1 is to 1.2. Now after that it's your call, you are waiting for here, because after multiple, it will not like it will immediately go and come back to a stop loss. It will sustain at this level, like between 38 and 23, but it will not go above this. It will like multiple time it will test and not go. So now based on the market condition, if you are thinking, okay, since it's taking multiple rejection, now let me trail my SL cost to cost in this scenario, because it could be unnecessary loss, because this is a hint, or you can put, you can sit for stop loss. I'm just telling my experience here. That's what beginner and professionals are separated. This small experience, right? I have seen multiple times, before hitting it get started rejected at 23%. If it clears 23% in one shot like this, then don't worry, it will take support at 23% like this. On 23% it will be taking supports. It will be taking support like this, like this, like this, and then it will hit like this, your target one. So if it's going and at finding difficulty at 23%, this is the scenario. Based on my experience, I'm saying, this is not a rule. Okay, just saying, you can sit for your stop loss, but based on the rule, I'm saying mostly stop losses before that. This is the signal I'm getting here. Okay, so I hope you are clear how I'm using stop loss and targets. Like, again, come back to the charts and explain you the things. Okay, so yeah, this is the chart. and I had drawn like this. I hope I'm now trying to connect the dots and you would also able to connect the dots. So here you see the market came here. Here is the one quantity you have to enter. So what market did? Market came here, no hammer candle. So this is 9:15 first candle. So first candle, if it make hammer here, I would be entering. So it's not making hammer by touching 50%. So next will be, what is the next criteria? I will be waiting for a bullish candle inside the zone since I am buying. Okay, means bullish view. So no bullish candle inside. Leave it. But as soon as it touches 70%, no thoughts. Immediately enter. As soon as it touches, immediately enter. Okay, and I entered here. So my both lots in this scenario will be entered here. This will be my stop loss, 76 point stop loss, and my T1 will be 209 point. That's the beauty of the setup. Minimum 2.5 you will be getting as T1 always. Here I will lock my T1. Okay, now it's up to you. It's come with the experience. I cannot give it as a rule, because sometime when you trail you will be in profit, because and sometime when you book at T2 at 50% you will be in profit. If you trail here, let's say as soon as T1 hit you start trailing, you have to wait for swings. Okay, now how you trail also depends. Some people trail behind the candle. As soon as it breaks behind the candle low is the stop loss. Okay, so candles low they put the stop loss like this, and here they will be out. Some people trail based on swing. So it's went up, made swing. So this swing will be their new trailing stop loss. This swing will be new trailing stop loss. This swing will be new trailing stop loss, and they will out here T2. Now, what is the beauty of this? If market comes down, at least you book T1 at how much point? 200 point, and here also almost 228. Okay, so great profit, right? But if and what is the bad thing in this? Means good thing in this. Good thing is you booked both the targets, right? Above 200 means above 2.5, 2.75 risk to reward. Okay, in long run, if you are working on a setup which have a accuracy of 30% and having a RR more than 2.5, you would be always making profits at the end. So at the end you will be green, no doubt, because we are having a good RR. But now let's not talk about the psychology and all those risk management part will come later. But what is the good thing in this? When you trailed here, you able to book both the targets above 200 plus point. Now what is let's talk about those people who book at T1 here at 0% and T2 exactly at here. Either you can trail cost to cost. Here you just put your trailing stop loss to your cost, like somewhere here, and then you wait for either T2 or SL. You can also do this method. In this method, what would be the beauty? It will hit T2, then you will be again a massive profit, extreme massive profit. See here, 1:5. It will enhance your account. It will grow your account like anything. See, 400, 300 points, right? Another lot. But what is the bad part in this? If you booked one lot here and trail other here cost to cost, then it might be a chance. Most of the, see, I will talk about in risk management. If you increase your RR, your accuracy will down. Okay, so if you are looking for a big RR, so you will get most of the time you will get stop losses. And if you are looking for a small RR, your stop losses count will be low. So both are a different methods. So if you like to put, okay, you can put for T2 and trail cost to cost, but you will get majority of the time, or more number of time cost to cost rather than this T2. And if you trail, maybe you will not able to reach every time here. Maybe in one flow only you will able to get, but most of the time you will able to book both the targets at minimum 1 is to 2. So it's up to you what kind of trader you are. I've taught you both the target booking method. T1, the traders will book in the same fashion at this point. Now, trader 1 will trail based on swings or candles, how you like. Okay, because in 1 minute candle is not enough, so swing you can try. And trader 2 will book T1 here, T1 here, and T2 here. Simple. No hard and fast rule. No changes. Okay, he will simply wait for his T2. What you can do for good, you can, when T1 hits, if you are waiting for T2, you are not trailing, then at least put cost to cost. So there are two target booking. Number one, book at T1 and trail. Book at T1 and trail. Number two, how you are trailing is up to your turn. And second is book at T1 means what is book at T1? Book 50% at T1. Book 50% at T1, and here also book 50% at T1 and trail remaining cost to cost and wait for T2. This is the second trader. So both trader have their own advantage and disadvantage. We cannot say which is good, which is bad. But at the end, both trader will come, in some market scenario, trader 2 will have more gains. In some market scenarios, like especially, in sideways market, which is not trendy, this guy will have more. Okay, he will, because he is trailing, so he will lock, more number of time, and he will only able to lock more number of time T1 but not T2. Okay, so you can also back test it, because I using, I used it from multiple years. Based on that, I'm telling, it's both, you cannot compare, both are different styles. So in some market condition this will work better. When it's a trendy market especially, this is a preferred method, and when it's non-trendy or confused market, this is good. Keep trailing, so at least you will not, losing your amount. Okay, so let's quickly, can we practice it quickly? Let me show you some more example here. 1 second. Here you see, let's talk about the downside, just to make you understand. I'm just drawing. Okay, how I'm drawing is not important. Just to, at this point my target is to revise target SL and T1 T2, not how I'm drawing. Again, we'll have multiple sessions on this. So this is a zone, you see. In case of selling, right, it's opposite. In case of selling, it's opposite. This will be 50%. It will be 61%. And you will have one line here, 70%. In case of selling, I will sell immediately when I see a red color or bearish shooting star candle touching here 50%. I can sell my one quantity here immediately. One quantity, okay, one lot or 50%, whatever. One lot here, or sometime you will see like this, some bullish candles market is making to, 1 second, to reach here, some bullish candles are being made like this. Okay, and then inside one first bearish candle it make in the zone. So here I will, in this or this. Your one lot entry will be like this. If it makes a shooting star, it's almost 44 minutes. I am continuously explaining to you. Okay. Okay, we are almost done. So shooting star at one lot will go here. If it don't make shooting star, any other candlestick, I don't care. Only shooting star is the exception. And inside the first candle, if it makes, I will enter one lot. And remaining here, it's a bullish, it's a bearish. I don't care. One lot will be here. Okay. As soon as it touches. As soon as it touches. Keep in mind this word. As soon as it touches. One lot goes here. Okay. So this is how I will add my one lot at this place and another lot at this place. Okay. Target will be same way we will book the target like this. Since Fibonacci we will draw top to bottom when we will be in downtrend. So your SL will be this level. Your entry will be at this areas and this. So average will come here all the time. This is my focus. My average should go below 61 and 70. And I will book my target here T1 and will wait for T2. So let's see here. Same example I have taken here at this point. So this is a zone market came here. So as soon as the first interaction, the first time it's going, it should make a shooting star. Red color shooting star means bearish shooting star. There is no bearish shooting star. So one lot I will enter on this candle. This first red color candle, one lot will go. Then the second one lot will go as soon as it touches here, you see. That's it. So my two lots entered. One here, one here. This is my stop loss. This is my stop loss and this is my T1. This is my T1. And now if you had trailed, let's say you are trailing based on swings, like this swing, then this swing, then this swing, then also you booked T2. And if you hold also, two traders, right? I told you in the beginning the story. Or a trader, what they do, as soon as T1 hit, he trail SL cost to cost and wait for T2. Both traders here are able to hit. And those who are trailing based on swing, so his stop loss goes here, first swing, then again second swing he's trailing, third swing he's trailing, and T2 achieved. So both traders are able to achieve it. What is the risk reward? That's the beauty of this setup. Somewhere here is my entry, middle average will come here, stop loss is here 90 points, means in option it will be somewhere 40 points. And how much I achieved? T1 almost 200 points, 1:2, and T2 1:3.84. That's beautiful. That's the beauty. You see the risk reward of this trade, right? That's the beauty of this setup, right? That's what been taught in, if you go for a very, very highly paid program, they do not teach you something which is not you have seen. They will teach you only that thing which is available, but in a different tested way, which professionals are using, but they will never share. Never. You are not gonna listen this things, okay? Nobody shares. You will. I'm the first person in this planet you would be finding in the Bank Nifty sharing these things, okay? But you will never ever think find people who is sharing this. They will share about those old school methods which never works, WM, right, which never works, right? Because we are taught, don't take bad guys if you are a W and M trader, double top double bottom. We are in my smart money concept I teach, W is taught to us so that we become a part of liquidity. And smart, this is a stop loss for smart money. M we sell, so all retailers sell at M pattern, so this is a stop loss, or this is a liquidity for a smart money, and it hits. Okay, so it's taught so that we can be a participant. Okay, we can be a participant in stop loss hunting for smart money. We are the food, and I already made myself out from this game. The general old school methods which is available on internet and taught, so still people are teaching it. And if he's a profitable trader or she's a profitable trader, she or he never uses that. It's for you, because he have to tell you something, then only you will trade with him or her. If he will tell you the real method, why you will depend on that person, right? But I'm the one who trying to do some changes. So really need, people should also support me here, you know and this is, believe me, 0.001% of my real knowledge. when i use when I trade in the live market, I have so much other concept parallelly I watch, but still you find it's very hard to digest in the beginning, many people. But don't worry, you don't need to master 1000 setups. If you master one setup, that nobody can trade like you on that one setup, you are master, you will be getting profitable. That we will discuss about in psychology and risk management. Psychology is very important, don't miss it. That's the major part. Trading have three pillars, risk management, psychology, and your setup. Everybody is running, but nobody works on these two pillars. That's why they are unsuccessful. And we will work on all pillars. First we are working on setup, then we'll work on psychology, then we jump to risk management. And I will make you master, no worries. I will make you profitable. Okay, so yeah, that's the one. Let me take one more for you, to just in order to show you how you can do this. Let me show you something. Here you see. Let's say I'm drawing my Fibonacci on this. You see, some bad examples also need to be shown. So here is the zone. Here is the zone. So your entry, right? The market came here and it didn't make any hammer here. So you will be not getting any entry. Your first entry, one lot will be here. Second lot will be here. Your stop loss is here. Now you see, which I told you. When before hitting a stop loss, it will give you a warning, right? So your average price of buying at this level, your target is minimum this point, and this is your stop loss. Okay, 75 point, in option 30 point 35. So before hitting, it will find resistance. I most of the time 23, sometime even at 38 also. You see lot of rejection at 38, means you are gone. This is the time, it's definitely it will go and hit your stop loss. Multiple rejection it will take. Then see, it came down, pull back, then again finally stop loss. So you might trail some more if you are seeing multiple rejections at this levels or this levels, but don't do it in beginning. First try the real setup for some days, then do some changes. Those who are smart people, I don't know, I means I actually I don't know, means no, I don't need to teach them everything. They will do, they adjust themselves. I know there are some smart people, they know how to do it. They adjust things for them. Okay, so I don't need to teach for them. I actually am not worried about for those smart people. They will modify this setup according to themselves by doing back test and more front test. Okay, but I'm worried about the beginners. For beginners in beginning, just take this SL. Simple. You don't need 100% here. This is not a CBSE exam, right? Which our kids have. They are sitting for the exam and you ask 90%. This is not that exam. Okay, this is not UPSC. This is trading. You do not need 90%. You just need 40%. Simple. And you have to focus how to get 40%, not 90%. So if it is an SL, take it, leave it, let it go. Okay. It's let no issues. Take the SL. But when your targets, is working in your favor, take the complete targets. Okay. And even we are booking at near 1 is to 2.5, 2.15 in some cases, depend on how you are averaging. And second target is above 3 or 3.5. So you are getting an average of near 3 and T1 and T2. Okay. And worst case minimum 2.5 to 2. So if you are getting this RR, you don't need much more than 40 to 30% to become a successful green trader. But still, our accuracy will be above 70 to 80% in long run. Okay. In some market cycles, it will come, you will get an SLSL, but again, when market cycle will come, you will get target. This we will talk about in psychology. Let's not make it more complex at this moment. Already we are now near the 1 hour of discussion. Okay. So yeah, that's all about. Keep revising it, take a note of this. And now I had thoroughly taught every single concept slowly here about the Fibonacci. Now we will again, combine it more in with the turncoat areas and Fibonacci's areas, in upcoming session. And we do a combine video. Okay, we'll use it the way I have taught you in the first video. Okay. So yeah,